What is up to the Ape Outliers? For today, we have kind of a mixed docket. I want to spend a little time going through the Bed Bath & Beyond case because I think that that's generally interesting. And then there was a couple other questions that we got in the Discord that I want to hit. And as always, whatever you all decide that we should talk about, we should take a look. So anything that you want to hit, throw it in the chat. We can dip, dive, duck, dodge, and dodge any direction that we want, dive into whatever. Unfortunately, our boy Newton is still slightly under the weather. So he and I were texting to figure out when we want to do our next session, but he's just looking to kind of, take it easy this weekend, rightfully so. He's been working a lot now. And live streams, I love them, but they do kind of require a lot of focus in order for it to be kind of a good conversation, right? So he's keeping it chill for himself. So make sure you all send your best wishes to our boy Newton. He and I were talking a little bit. He actually had a couple recommendations. I always like to talk to him about what he thinks we should take a look at. And he had two things that he brought up. He thinks we should take a look at Cost and Chewy. And then he also wants to take a look at he suggested that we take a look at some of Roaring Kitty's charts, is the last that I got. So I think we will dive through those. Also, we have somebody in the chat named California Pizza is Best, who you just know that probably a great person, but they are just trying to start some shit, is what I think. Because it is objectively probably some of the worst pizza I've ever had. I've had better pizza in Las Vegas than I've had in California. And I'm from New York, so I do have a lot of respect, and that's where I think the best pizza is. I would not call it California by any stretch of the imagination, but I have to imagine our friend California Pizza is Best knows exactly what they're doing. So shout out to them for ruffling people's feathers, because that can always be kind of fun. All right, let's see who we got in the chat. I see PFA, Nola, Ron, Ape of Spades. That's a great name. Ape of Spades, Eating Crayons. I second that with you. Shrey J is here. We got California Pizza is Best, which again, I probably would have to argue against. Cedric is here. Chris is here. Somewhere, nowhere. That's kind of tricky. Well, I guess it's nowhere, as in they know where. That's pretty good. Let me grab this chat, move it over here so it's a little easier for me to keep up with you guys. Mark says, John's of Bleecker, best pizza in New York City. I'm not sure if I've had theirs before, but I think really when it comes down to where the best pizza actually is, a lot of it comes down to like what hits up like nostalgia metrics. Cause I remember as a kid, my favorite place was Tommy's in the Bronx. Love that place. But yeah, I think a lot of it also comes down to like just what nostalgia buttons get hit. Sneehill Veja says, sir, no Richard Newton. Nope. So Newton is not available to join us today. Like I said, I still think that he's trying to like completely recover, because he also started like his standard work, and it's a lot of work. One, doing all the GameStop stuff, and then also doing like his standard job picking up, and he was sick most of last week. So Day Swag says, also, I like that you know Newburgh. I literally grew up there. So I went to NFA. I went to South. I know Newburgh super well. It's where I got stabbed in my hand. So super, super familiar with, super familiar with Newburgh. California Pizza's Best says, I got booted from Jackie's stream after he talked about turning 1,000 to 1 million. I don't know anything about any of that. So I am not going to weigh in. I got to be honest, like I've heard people mention him before. I'm just not familiar with his work. So I have really no opinion one way or the other on that side of things, at least. I kind of stick to the stuff that I spend time experiencing. Like with Newton, the main reason why I started working with him on this stuff is that like I could just tell he's a genuine human being, which is kind of rare to find in finance media, finance YouTube and stuff like that. So I naturally gravitate to those kinds of people just because I identify with them a lot more. I'm not saying that Jackie's not that. Again, I don't know him. I literally don't know him from a hole in the wall. But that's how I started working with Newton, especially on like the broader GameStop stuff. So All right. Let's start here. So I started reading through this. A lot of it is mostly because, damn it, I keep forgetting to not put it behind my head. I changed sides. So it completely screws me up now that I'm on this side as compared to that side. And as you can tell, I forget all the freaking time. So when I look at this, there's a couple things I'm looking for. And again, just as I'm trying to develop a fingerprint for Roaring Kitty, the way that he does things, more just because I think as an actor, he's interesting. Not like an actor putting on a show, but like as a participant in this market, I think really, really interesting. So I enjoy learning about him, the way he thinks about things, the way he does things. Cohen is obviously another one of those people. I spent some time watching a live stream he did a while ago. No, that's a lie. Sorry. It wasn't a live stream. It was like a podcast, I think. And it's like one of the only podcasts I've seen him do. And I learned a lot about Cohen, honestly, during that podcast. Let me see if I can find it really quick for you guys. I'm sure you all have seen it, but just in case somehow somebody hasn't, I think it's good context. Ryan Cohen podcast. Yeah, this one right here. So I think this podcast here, this was really fun to watch. If you guys haven't had a chance to watch this, I cannot emphasize it, or I cannot like recommend it enough. It was so good because it was such a cool opportunity to get a chance to like learn about like Cohen, the way that he views things, the way that he interacts in a much more kind of relaxed setting, right? So he's not being deposed. He's not on some sort of like large media interview. He's just kind of having a conversation with this dude. And I think the conversation that they had was fascinating because it was a really good mix of shit that was about Cohen specifically, his background, him as a person. But then there was a lot of stuff that we got to talk about, the way that he thinks about business and the way that he does things, which is really cool. This is actually where I learned a lot about his tweeting, and his tweets now, to me, they make so much more sense. So if I grab Cohen's Twitter, if you go through that podcast and then you look at his Twitter, I mean, it literally lines up perfectly. The fact that he did this, the fact that I think he changed this a few times. It used to be, I forgot. He had like two different versions in his bio. One of them was like she, her, something. And then the other one I think he had was like unemployable or something. I forgot exactly what it was. Again, you guys probably would know better than me. But the point being is it's just very clear that the dude, he just likes fucking around. Like he's just playing games, and it's hilarious. So like this, the Kamala coffee and the Trump coffee and what they are, absolute joke. Kamala 2069, absolute joke. This absolute, like he's literally just playing games, and it's hilarious because when I listened to this interview, it made way more sense. Like the dude just doesn't take the stuff that seriously. He actually reminds me a lot of Musk in the sense that like they're obviously very successful people that actually think that like the system and the game is kind of bullshit, and they don't want to play like the corporate game by standard corporate game rules. And they like moving around a little bit more freely and just calling the nonsense as it is. Like that's some of what I see. And it's just so refreshing. So I bring all of this to context because when I'm looking through like this stuff, and then I start reading through the deposition a little bit, again, I'm developing a deeper and deeper understanding of how this thing all works for him and the way that he thinks about things, because I think it's important for us, especially because like I own shares of GameStop. So it's admittedly a small part of my portfolio, but nonetheless, I still care about the performance. I don't hold stock in pretty much anything. I trade options. So there's a few things I hold stock in. And it's, again, I remind you guys, a lot of it is to like support the movement and it's to participate, right? Because when there's something cool that's happening, I like to try to contribute to it the way that I can. But in my DNA, I'm a trader, man. Like I'm always going to be a trader. It's how I do what I do. I started in 2007. It's not going to change for me. It's how I make a living. So there's like the trading part of me that does stuff. But then there's, in this case, part of me that's an investor in a company and I'm holding shares for it, which I don't do much. So when I am in that position, I want to know about the company. And I started kind of getting caught up on this whole case. So I want to preface kind of poking through this with you guys that I'm not an expert at any of this stuff. I'm not an attorney. I'm literally just a dude that's online. I'm intrigued by these things. So there will be parts that I have some background information on, but I would wager, hands down, you all know collectively, definitely, far more than I know about this whole thing. So because of that, I want to poke through some things that I did see that were pretty interesting though. So as you can see that this case started in 23 Aug of 22. And from my understanding, and again, please help me understand if I'm wrong. That's really the whole point of doing these in a live session, specifically in these instances, is because it helps me learn as well. I'm not here just to teach the elements that I know. Again, like if it's something about options, I probably can teach you about it. That I know inside and out and sideways. Managing a portfolio analysis, that's my bag. But getting more and more the context of this broader story, that's where I'm learning. And I traded the squeeze twice, the one that we had recently and then the one before that. But I traded the movement of the price, right? That's what drew me to it as a trader. But after this most recent one, I started paying more attention to kind of like the broader story, because at this point I had been on YouTube and I started just getting infatuated with the background of this whole thing, because it is such a fascinating place to be. The way that I approach markets is so different than this. So all of that context is to say, most of this is not my strength. There's pieces of this that I can definitely talk about very strong, well, but there's a lot of it that I don't know. So anyways, going back to this, I was trying to understand even the origin of this, which it really seemed to amount to some sort of stock market manipulation pump and dump. So when I was reading this initial complaint to, again, get that general context, you can see that a few things came up. And the way that this thing is moved has actually been also pretty interesting, because if I'm not mistaken, do you guys remember when the first Bed Bath & Beyond, when this happened? Because if I'm not, what was it, like 2020 that it went down or something like that? Or was it 2022 specifically? Let me see. So the reason why I'm thinking about the timelines is just the timelines that this unfolded from, like when the initial event happened versus when they actually filed. Twit2B says, make your position larger. I'm near 45% of my portfolio. Yeah, dog, it's not going to be me. Again, I just got to keep it a buck. I like the stock for sure. Like, I think it's interesting and I think it's at a really, really cool spot here. But the nature of being a trader, it's completely different, man. Like, the way I look at markets is I'm looking to find opportunities that I can trade up, down, sideways. I don't care. But it needs to be something that I can trade and consistently make money off of. The way that I trade is completely different. And I don't want to make this about that just because nobody cares. But yeah, the Cliff Notes version of it, though, is that what I do as a trader is completely different. It's literally completely different. So yeah, the two parts of my brain are engaged in this kind of story. There's the stuff that's just fascinated by GameStop, Ryan Cohen, Roaring Kitty, the whole background, FTDs, the swaps, the different kind of tailwind cycles that we think exist. Like what Newton put together, this is like a freaking, I call him my scribe, not my, right? It's not possessive like that, but like, he's like the GME scribe. because he's done such an incredible job staying in touch with what's going on. And he absolutely spends a lot of time and effort, finding things that feed into the story. And he and I actually spend quite a bit of time both on live streams. He and I have spoken more off live stream than on live stream by quite a lot at this point. And we talk about like these different things that he's coming across and try to analyze them. Because it's, again, this stock moves so differently than normal stocks. And for somebody like me that's been in markets for so long, coming across products that do that is so intriguing. Like there's no other way for me to describe it than pure intrigue. To see things, it's like if you play a sport, right? If you're a martial artist and you think about certain movement patterns, there are things that are generally universal, but then every once in a while, somebody will come up and do things completely different. So that's kind of like a John Jones kind of fighter who's not really perfect at anything, but he's really good at most things. And he's super creative, or like a Mikey Musumeci from a jiu-jitsu world. Like they move differently than like the standard. And it's part of what makes them so intriguing. So when I look at GameStop, it's absolutely intriguing the way that the thing works. So Day Swag says, I feel like you could trade GME pretty consistently, but not your portfolio. Yeah, absolutely. I think that's a completely fair statement. I think traders have to figure out what's right for them. So like, for example, if I look at GME and the way that GME has been moving, the notion of could it be traded? Absolutely. This can be traded, no doubt. But from the context, also there's 100 of us here. So shout out to the outlier apes, or just the apes, whoever's here hanging out, all are welcome. But when I look at something like GameStop, could I trade this here? Of course, I could always trade something if I'm so inclined. But the question I think a trader has to ask themselves is not like, could I conceivably place a trade in this? Could I conceivably place a trade? Yes. The question realistically is, where is the best place for my money? That's what I care about as a trader. So to me, the question when I look at something like GameStop or any other opportunity is not, could I trade this? At this point, I can structure a trade for anything, but it's where is the best possible place for my money? And it's not just in terms of where can I make the most money? Where's the best return? It's how do things fit into my portfolio so I can deploy all of my capital in a way that achieves my broader objectives with my money. So yeah, Day Swag, I completely agree with you. Somebody could easily focus only on GameStop. That is completely possible. But it's a really tough way to make money in general. For a trader, for an investor, it's definitely a different story. Investors have to do whatever's right for them. But even somebody like Roaring Kitty, that's one of the reasons why I'm so fascinated by him, because he is an outlier. He's a true outlier in the way that he approaches markets and the way that he approaches money and the way that he runs trades. And he's been extremely fortunate. I will, again, keep it a buck. The dude's smart. He's super smart. But the thing about the way that he's been able to grow his money is that it's not even just about being smart. It's also a lot about fortune, like how much luck is involved with how positions happen to be built at given different point in time. Now for him, he's obviously sustained the approach for some time. So it shows that I would argue it's more skill than luck, but there's still a healthy dose of luck. So with stuff like that, like looking at somebody like Roaring Kitty, I think it is so important, absolutely so important, that we have to have like a healthy understanding of survivorship bias, how that works. And again, even the cat, he's moved from, at least I think, I don't know if he sold out of GME. I can't say definitively, but I think he has. And it looks like he's rotated into Chewy for now. I don't necessarily think by any means that he's done with GME. I still think that, again, based on the breadth of evidence I've come across, it seems like GME is kind of like his bag. But I also think he's venturing out for opportunities where he sees them. So I think that's part of the reason why he moved, at least in the short term. Now, again, I want to be very, very clear. I don't know because I haven't seen his portfolio. I don't think anybody has. And with that as the case, it's impossible for me to say definitively, and I refuse to. That's another thing that you'll find about the way that I talk about these things. I am so mindful about the framing of things. And I think a lot of people are too comfortable saying things as fact when it's impossible for them to know it as fact. And I think that's dangerous. That creates a really bad habit in our brain that we turn things that are well-educated guesses into fact, and they're different things. So yeah, somebody like Roaring Kitty is just absolutely fascinating to me in the way that he trades. So back over to this though, I started reading through the case to understand the broader context of like what the problem is, what they're thinking about. Let me zoom this in a little bit. Let me know if that's easier for you guys to read. If not, I can zoom it in a little bit further. PFA has to step away for a few moments. PFA, let's not joke around. We know that you'll be back in about 45 seconds, but that's good. Enjoy those 45 seconds as best as you can. And then, yeah, that's great. We'll catch up with you in a few moments. We got Roaring Titty. You guys didn't tell me Roaring Titty was here. Every time I have a chance to say that name, I'm always here to say Roaring Titty. It's great to see you. Oh, PFA pulled their message back. That's unfortunate. It was good for everybody. That's okay. It's all right, PFA. It looks like PFA might be back already. That was quick. About correct time, I think. All right, back into this. So let's take a look at the primary complaint. And I'm not going to go through each piece in this docket at all. My intent is just to help us align on the big muscle movements and to have everybody on the same page. Because one thing I do find people do, not just in the ape community, but in most communities, is I don't find people take the time to go to sources. And I think it's important to go to sources, to like actually see with our own eyeballs what something is. Because a lot of people, they have like different opinions of stuff, and that's okay to hear the opinions, but I think it's really important to see the actual information. Again, like you can tell from the way that I typically present content to you guys, I'm very specific when I'm talking about something as an opinion. I literally will say, in my opinion, very purposefully, so that you know that is my brain interpolating information and coming up with what I think. But there's also a difference between like objective information. So that's what I aim to align with on this specifically, is what is the objective information? What is the origin of this thing as it sits? So the lead plaintiff, this homie, individually and on all other persons situated. So from my understanding, stuff like this happens when there's going to be some sort of potential class action suit, bigger suit, but they pick a lead plaintiff and then they represent other people that are in similar scenarios. So from my understanding, they'll typically do this so that they have obviously a focal point to work with, but they'll also try to find somebody that like represents the case well. The most recent case against Roaring Kitty that was filed, I think on a Friday, and it was dropped on the Monday, which was really interesting. I did a video on that a while ago. That was a similar scenario where they picked somebody to be kind of like the lead in that case, but I thought the lead for that case was really, really weak. So I'm actually very curious how strong this lead is in this case, because yeah, I think that's kind of an important, I don't want to say that important, but it is kind of an important factor to have somebody that represents it, that has, I don't want to call it like a more exaggerated story, but definitely more severe story would make sense. So let's see. Within allegations based upon the investigation conducted through the plaintiff, they reviewed analysis of Ryan Cohen, Arnal Gustavo's public filings with the SEC, press releases, public report news articles, research reports, so on and so forth. So this is a federal securities class action brought on behalf of those folks who purchased stock from within the time frame, essentially, that they're referencing. And it says the plaintiff brings to action derivative action within the meaning of rule that. So this is kind of just the foundation for the case writ large. It's talking about everything, what it ties to for different case laws and different rules that they have to abide by, who has jurisdiction, yada, yada, yada. I want to see where we see the where we see the meat and potatoes here. So here is the first part. So Peng Chang C, it looks like they're saying that they acquired 8,020 shares, and then they got it. They're arguing when it was artificially inflated, and then they lost $106,000. First off, I boo fucking who? Cry me a river. But that part aside, let's see what they say. Canadian citizen called by media is the meme stock champion. Is that accurate? Is this true? Like, is this actually what he's generally known as, the meme stock champion? I've heard of him. I know like Elon calls himself like the meme stock king or some shit like that, but I don't know about the meme stock champion. Does that make sense to you guys? I think we should be back up. My bad. We took a little hiatus. You know how it goes. I think I messed up something in OBS. Okay, so Paulo says full iceberg. Well, all right, we're back at it. Also, there's 69 of us, so that was worth dropping out for a moment. Okay, so it sounds like Colonel says you're breaking up. Let me know if the audio is still coming through choppy. The OBS looks like it's going through okay. I see 60 FPS, 4,600. All right, so Paulo says I'm thawed. That sounds great. I'll go with thawed. That's all right. And Dr. Zayas says we sound okay. So it looks like whoever says that I'm coming through broken, we're just going to have to get you off of bad Wi-Fi. So, okay. So it sounds like from consensus, though, this isn't actually something he's like overly well known for. The reason why I was asking this is because I see this where, again, like, in the deposition that I was reading most recently, it looked like they were really trying to lean into this shit. And I'll explain a little bit why I think that is when we get there. But I was genuinely just curious if this is like a well-known name for him. And it sounds like generally not. So it says Cohen has employed, oh shit, they're getting right into the meat and potatoes. Has employed pump and dump scheme to raise as much capital and ignited several meme stocks to jaw-dropping heights. He served as chairman of GameStop's board since January 21 and throughout the class period. So that's also fascinating. Now, obviously, they have to come out with their forks and knives in order to start getting something spicy going here. But when I'm reading this, I think that they kind of forget quite a lot that he can't actually do this that well. The problem with larger float stocks is that they're difficult to manipulate. That's why traders like me tend to not trade penny stocks. So if you've ever been in any of my weekly update live streams, whenever people bring up, penny stocks, I'm always not about it. And it's because I can't really trade it and they're really prone to manipulation. So Evergreen says moron alert. Yeah, I mean, I don't think you're wrong, brother. I probably fall squarely into that category, but I'm enjoying learning about the story and whatnot. So hopefully we can learn a little bit together. But back to this, it's difficult to actually run some sort of broad pump and dump on something like this, in my opinion. So could it be done? I absolutely think so, but I think it would be really difficult. There was a recent case. I'm not sure if you all are familiar with it, but there was an entity. I'm not going to name them because I don't want to give them any undue press. And the entity, though, they were straight up running pump and dumps. And it was clear to see. There was very clear messaging behind it that they got from fact finding. So, yeah, I mean, that's a clear example of pump and dump. I think this is a really difficult argument for them to make here. But when somebody has a lot of money, a lot of times they're not necessarily trying to position something that is super solid enough to go through and win a trial. Because really, if they can get them to settle ahead of time because they don't want to go to trial or whatever else, that's what this is for. So even if this case is not the strongest thing based on our opinion or whoever else's opinion. The main thing is they're kind of just taking a shot here. And if they can get some of this to stick, then it becomes kind of, again, just how much can we potentially get from this dude to settle before even going to trial? Because that's the vast majority path of cases, is not trial. So this has like a little bit of mango on the lip. Got to get my mango. Roaring Titty says, isn't Cohen also the son of a big-time trader? Yeah, I think his dad not only was a trader, but I'm pretty sure he was a businessman. So let's see. Ryan Cohen's dad. Ted Cohen. Let's look up Ted Cohen. This shows philosophy. That's not right. There's a lot of... Damn it. I actually think he's more well known for like Ryan Cohen's dad. That's funny. I don't see, like, I was curious if there was a Wikipedia page or something. If you guys can find a Wikipedia page on it, let me know. I didn't see one doing like a really quick, pick through. But yeah, I think he came definitely from money. He also came from a pretty well-educated background. So yeah. Evergreen says, so buy Fubo tomorrow since they won the federal lawsuit against Disney and competitors. Oh, I see. Evergreen's just talking to somebody else. I see. All right. Nola says he's really known for Chewy, though. Yeah. Yeah, that's exactly right. So Ryan Cohen is really the one that started Chewy. And that was a fascinating business venture for him because his direct competitor is somebody like Amazon, and he found a way to angle in between Amazon and a broader market that overall, by all intents and purposes, they had dominated. So that is a really, really interesting outcome, I think, for Chewy and how successful he was able to make it. Roaring Titty says, never mind. AA says he's not a big time investor. Yeah, I thought he was a businessman more so. Pat Smith says glassware company. Yeah, okay, that checks out. I thought he was a business dude. So they're trying to say essentially that he ran a pump and dump. And this is talking about JP Morgan, don't care. Defendant RC Ventures, Delaware Corporation. That's super common, by the way. LLCs very often are going to be out of Delaware because they have more favorable business laws. It talked about... Okay, so he bought in 10% stake in Best Buy and Beyond, Bed Bath & Beyond in March of 2022. And the defendant has served as the company executive vice president since May of 2020. And here are the allegations. Plaintiff's claims are typical claims members of class, adequately protect the interest. Here we go. So the class is so numerous that joinder of all members is impractical. Impracticable? Why would it not just say impractical? What does this word mean? Impossible in practice to do or carry out. Why not just impractical? Why does it have to be impracticable? Learning new words. As of 22 AUG, BBBY is essentially 80 million shares outstanding. So such shares traded on NASDAQ. Exact numbers not known at this time. Numbers in the thousands. Okay, so here are the actual allegations. It says that there were materially misleading statements, omissions made to investors regarding the company plans, financial conditions, so on and so forth. So not representing the company is effectively at all times Gustavo as the executive VP, CFO, and treasurer control day-to-day affairs. And Cohen was the largest shareholder who appointed 3 directors to the board, a controlling person pursuant to Section 20A. through mid-August 22, BBBY appeared from the company's prospective statements and financial reporting to be a successful turning around company. So let's grab a chart of BBBY. And then let's go back 5 years. I don't even think we have to go back 5 years. We do like maybe 3 years, except I want daily. So let's do a 3-year daily chart like that. That's better. Okay. So this is not going to be behind my head, but I think I'm mostly out of the way. So here we can see where 22 was. So 22, just for reference, starts right here. And they were saying the time frame that they're referring to through mid-August, which is here, which is really interesting. Because if you actually look at this chart from that time frame, this wouldn't look like a company that's turning around. I mean, just, I don't know, maybe I'm being nitpicky there, but I wouldn't consider that a company that's turning around. It looks like a company that's having giant problems. Now, for those that don't know, from my understanding, somebody like Ryan Cohen seems to, I just realized the chair was like screwing up the background remover. Ryan Cohen seems to like to intervene in seller boxing, which seller boxing is man, it's an interesting business practice, but it's essentially, to not go super far in the weeds, it's a predatory business practice where you attempt to extract as much money from a company before it goes bankrupt. And the reason why you do that is because if you essentially extract as much value as possible and then you short sell something and then it goes bankrupt, you don't have a tax footprint. You don't owe anything because the entity is gone. So there's an incentive for this predatory practice. And essentially the way it works is investors of different sorts, sometimes in cahoots with a broker of some sort, will identify a company that's otherwise struggling. They'll put a board in that specifically, or one of two things, either a grossly incompetent board and leadership team that they know is not really going to save it, driving it into the ground, or somebody that's complicit with the behavior, either or. Again, don't know in this circumstance what that was looking like. But the process can make a ton of money. So that's why they're incentivized to do stuff like this. Now, for somebody like Ryan Cohen, if you're able to turn the company around, it leads to stuff like this, to squeezes, and it leads to movements that force the other side of the trade that was shorting it to get out of their trade, and it can make a shit ton of money to the upside. Now, it's very, very much difficult in order to make that kind of turnaround. But if you are able to make that kind of turnaround, you can make a ton of money. And I think Cohen started getting more into this activist investor role because of some of the possibilities there. Now, again, I don't know his actual motivations. I don't know if he's in there for chivalry to go in there and save a company. I think he's still a businessman, but I think it happens to coincide with doing something that I would consider to be more honorable than, participating in purposefully sending a company into the dirt because you have a chance to make a tax-free gain on it. So that's what I think in general, one of the reasons why he started moving into this is because he saw an opportunity here to navigate that. So here it says through mid-August, it appeared to be successful turning around. The company appeared to be moving rapidly towards growth, profitability through fundamental reshaping strategies, spinning off the bye-bye baby business. The picture, almost entirely fiction, from March 22 through August 22. They're saying that Cohen, in conspiracy with Gustavo, engaged in fraudulent scheme to artificially inflate the price of BBBY publicly traded stock. More specifically, with JPM's aiding and abetting, blatantly misrepresented the value of the profitability of BBBY, causing it to report revenues that was fictitious and All right. So they're in here talking a bunch of shit. I think if anybody has any questions on this, I think we can go further into detail if you'd like. The only reason why I really wanted to start with this document is so that everybody has, again, from the source, what the issue is, what they're looking at, and why they're looking at it. So my intent isn't to go through this entire document because it's going to be super one-sided. This is the complaint. When you see a complaint, this is the people who have a complaint that are going to talk all their shit. So it's going to be super one-sided. I don't care to go through this, but for those that want to go through the whole thing in detail, I'll drop a link in the chat. You guys all have access to that now. And then I'll drop a link to the broader thing as well in the chat, just so that you can have the entire docket. I'm pretty sure this is on Newton's sheet somewhere, if I'm not mistaken. If not, I'll make sure that he also has it, because it's not really GME, but it's tangential via, Cohen, because this does impact Cohen when he has pending litigation like this going on. So that's this one. So we now understand, again, from the source, what the general gripe was. They think that these two in cahoots were trying to spread a fake story about Best Buy, essentially for their own gain. And I have to open my door real quick because the boss is here, aka Thor. So I think he heard us talking about legal stuff and he decided to come check it out. The main thing is he is kind of hilarious. He goes up to my door and he just scratches it once. Oh, you're tired. Why are you so tired? You've been sleeping, bro. He comes up and he scratches the door once, and then he scratches it again, and then he scratches it again. Like a very, very specific cadence. But as you could tell, he's ready. He's interested to get into the legalities of GameStop. Do you know about this? Hey, need you to focus. We're going to talk about depositions. You know what deposition is? Yeah. I think he's ready. I feel like he's essentially, you could tell he's ready for court. He has his tuxedo on. He does have a mohawk. I don't know how well perceived that would be in court, but yeah, we got the boss here. All right, let's get my ugly face out of the way now. Alan says, real quick, can you explain for me how to buy shares of GME on the lot market? I've seen a lot of talk about retail traders orders not making it to a lit market. Okay, you meant lit market. Yeah. So depending on who your broker is, you can choose where to route your order. So again, I don't know who your broker is, but if you choose order routing, then you can essentially determine where you want it to go so that it's not gone through a market maker. So if you use something like the ICE, it's an electronic exchange. You can change the routing of your order so that it's not being fulfilled through a market maker, that kind of thing. Cedric says, oh shit, this guy's USMC. Yes, sir. That is exactly what all that paraphernalia is that you see in the background. Roaring Titty says IEX, I think. Yeah, so you can take a look at a couple different ones. Alan uses Robinhood, so I honestly have absolutely nothing to say to you because the last thing I would use is Robinhood. That is straight up the last possible broker I would use. I would rather use a fucking notepad that I mail to people than using Robinhood and supporting that business. I would rather use stone tablets that I chisel my trade and deal with the delay of FedEx shipping stone tablets in order to get trade confirmations than going through Robinhood. There's just no way. So the main thing you want to look up though is specific to your broker. Once you get an actual broker, is just how to route orders directly to the exchange. So if you route orders directly to an exchange, you're now bypassing the market maker. And you don't really need to, you don't have to have your order internalized. So yeah, that's what you can do there for that. It's a good question. Ian says, dude, I remember these live streams 2 years ago where you had 10, 13 people. So sick to see how the community is growing. Yeah, man. I have to be honest. The funny thing about the way that you could tell that I'm not in this for like the fame or the attention, because exactly as Ian is saying, I've done live streams since I started on YouTube essentially, and like we used to have like 10 people, which I was totally cool with. My goal for being on YouTube is just to try to share information, because when I started looking at the broader picture, there's so much shitty information and terrible people that are just trying to make money off of people that it drives me crazy, especially because the people that they're trying to make money off of are the exact people that don't have the money to waste. So I did a thing for a while where I was doing like these trade service review stuff because I was like super pissed off about it. And I was trying to find like decent trade services, and I can't find them really. They're hard to find. But yeah, we've been running this for a minute. And it's fun. Yeah. I love seeing the community grow. It helps also with just collective intellect and like the hive mind and the overall amount of information we have available to us. It's just straight up beneficial for everything. Paulo says, when is it advantageous to bypass the market maker? Really, if you don't want your order being internalized. So like if you want your order to be processed on the actual exchange, that's when you could do it. But other than that, again, from like a practical perspective, it's not really beneficial. More often than not, you are going to get a slightly better fill through a market maker because of the way that payment for order flow is structured. Again, just keeping it real. I'm not saying that I love payment for order flow or anything. I will, again, objectively say markets now are more efficient with payment for order flow than when they were when I started trading in like 2008, 2007 is when I started, but specifically with options. So like payment for order flow isn't all negative, but I also don't think it's great. Like I think we're at a point now where we've seen how this works. And I think that we're at a point where we can kind of move past payment for order flow into the next thing, because there is a next thing that's better than payment for order flow without a doubt. But yeah, it's just kind of where we're at least at the point now. So yeah, that's the idea about bypassing the market maker. Eric, it's my doppelganger. Eric says, have you heard about the cat error reporting numbers? There appears to be a correlation of a significant number of equities error reporting dates with GME price run-ups. Interesting. Really, really interesting. No, I haven't looked into that. If there's somewhere that I can take a look at it, let me know. You can either email it to me now and just let me know when you email it to me, or you can drop it in the Discord if you're in there. Either or is totally cool. Eric at outliertrading.io. That's the new email address. So for everybody that doesn't know, I've moved the branding from ES Invest to Outlier Trading. I just want it less like focused on me. It shouldn't be about me. So that's what that is. So that's my new email. Okay, yeah, if you put it in the Discord, I can grab it real quick and pull it up. No problemo. I see. Let's take a look. All right. So this is from Region Formal. I say those names because you guys might know them. I honestly don't. So I don't know exactly who they are, if they have a background with you all. I don't know them, but just in case you do. It says FINRA has just released the latest cat error data, and it has them intrigued. So once a month, it says FINRA reports cat errors volumes for each trading day. Yep. Notice the error rate percentages, which are trades that occurred on all dates, did not contain all regulatory required information. On most dates, the rate is less than 1%. However, occasionally much higher numbers. 1st of May. And I'm just trying to follow the logical thing here. Specifically, on 9 occasions, there were excessive errors over a short duration, 1.8 billion within 5 days. All 9 instances resulted in significant price runs for GME within the next 60 days. Here's the deal. I could see the interest here. The interest is interesting. That was kind of a funny sentence. But again, for like, if this is the trigger, right, that if this happens, that there's a price run within 60 days, that's a long ass time. And what happens over that 60 days, it's like, unless you can purely isolate this thing, the cat error as the thing, unless you can purely isolate that, then to me, and that's one of the things that makes the whole GME story so difficult, because it's so difficult to actually isolate individual things. So in this case, does it look like there's a relationship? I mean, they're saying in 9 instances there was a relationship. I would need to know essentially the full data set, though. And maybe they have it in here, but like I would want to see all of the instances, not just 9 instances. So this says all 9 instances resulted in significant price runs, but were there any instances where it went up and price didn't move? I would need to know that. But the other thing is, with such a big window of like 60 days, I think it's really hard to like point at this and say, this is the thing. Again, to their point, I'm not saying that that's what they're doing, but to them, it looks like there's an interesting correlation, right? So it says, I found this trend applies to the market as a whole. Much stronger for GME than other stocks. Blue bar's average performances of the stocks from 15 to 25 in the 9 instance of the higher billion error cycles. Tested price action after huge cat option error periods, found the opposite trend. It looks really interesting. So this is the kind of data that I find really interesting, because again, what I see is there's 2 different parts to this. The first part is from just a general trading perspective. So I'll again use the example that I share with you guys here, which is in GME. If we go back here, do a year. If we go back here, I noticed something even before like the market started taking off on this first leg up. You can see on the 3rd of May, there was a massive, massive increase in price and volume. So what causes this? I couldn't tell you, but this is one of the things that caught my attention. So when I look at this kind of run up, I see just interesting behavior. I see an explosion in volume that's focused on buy side, and I see a massive movement in price. So now how that corresponds with, again, this other data that we're looking at, I don't know. But what I do know is that before all of the squeezes that I've seen, there's been a really anomalous run up in average volume. That I can point at. What causes the run up in that volume, I don't know. But I do know that whenever I've seen GameStop run, the volume has changed. So for me, that's the indicator I look for personally, because I can directly look at it. Nathan says, yeah, and those 9 times price run happened completely different ways over those 60 days. So it's not exactly isolated. I got downvoted to hell saying that on his post. Well, I think the problem is, Nathan, for that, like why you would get downvoted is because like, depending on the way that you frame it, right? Because I think one of the problems is it's so easy to cast stones and disprove theories, and it's much harder to come up with like efficacious theories. So the way that I typically try to look at addressing those kinds of things, at least from my mind, is from a pure scholastic standpoint. I am interested in finding the holes in the faults in a theory, not to tear it down because I don't want it to be true, but because I'm attempting to find truth. But I normally try to approach it from a method of how can we, if there's a hole in the theory, on how we can build on the theory to try and, again, identify as much truth as possible. That's the idea, at least. So, yeah, I'm not sure. I'm not exactly sure what the background is behind like your comment or how it went. But yeah, it's really interesting to see those kinds of connections made because, again, like there's no doubt that that is a fascinating correlation with the cat error data. Like that's something, but whether or not that's the actual trigger to something, I'm not sure. I'm really not sure. It's very difficult for me to tell. So it's something that I would keep an eye on and see what I could then tie it to and try to isolate. That's one of the hardest parts when I look at this here and I explore Newton's data. And we kind of talked about this. I can find a lot of instances where it's like there's kind of these really neat correlations between things where we might see FTDs skyrocket, or we might see some of the ETF FTDs skyrocket. Like we can see these different pieces that start to move. But then I can also find instances where like the pieces move and then price doesn't move. So again, from like a correlation standpoint, which again, like my background is based in stats. So from a correlation standpoint, it becomes really interesting to try to isolate it. And again, for me, the cleanest isolation I've found so far is volume. And no shit, Sherlock, there's nothing magical about that. It's like very common. Now, the tricky part, I think for a lot of people, is trying to identify where the volume comes from, which again, it looks like this is a start on that. But I think Noah says not every cat error equals an FTD, which is another really important point, I think. I think when we look at cat errors, it tells us there's something going on with tracking, but we don't know exactly what. So I'll have to see. Okay, so let me grab this link really quick. So this is the cat data. Where's the actual data? I see the presentation. So this link, it says the error update including the data. So maybe it's in the presentation. So that's what I'm looking at here. So what I can do is I can pull this data down and then I can run a slightly different analysis that essentially can test for correlation, and then I can regress it and assign a confidence interval. So I'll take this as an action item. Let me write that down. I have to write it down because I'm pretty dumb and I mess things up a lot. All right, so let me get rid of this because it's interesting. Again, like all of these different kinds of things I really, really enjoy looking at because they are so interesting. But a big part of it, at least for me, is to try to like actually see if I can get to the heart of signal from the information, because there's so much interesting information. So I need to do like a cat error regression and correlation. So then I'll add this to my to-do list. This, I'll save this as a bookmark on to-do, and then we'll take a look at that. So I'll follow up on that to see like what I can find, because I'm not sure, but this looks interesting to me. I can objectively say that this looks interesting to me, but it looks like there was another comment. Let me see. Diana says, what initiates more volume? I know news and earnings usually does, but what else? This isn't designed to be like pedantic, but the genuine answer, and just to start from like a base level understanding, is it's more interest in the stock. It's demand. It's people buying. So when I look at volume, it's in the simplest form telling me people are buying. Now, why they're buying, that's where it starts to get interesting. So in this case, are they buying because there's an FTD cycle and they need to accumulate shares in order to cover? That could be. Could they be buying because there are swaps coming up and they need to be able to deliver on the underlying? It could be. There's a lot of reasons why volume might start to emerge. But again, from like a trading perspective, we actually try to eliminate as much of that noise as possible because it's noise. The thing that matters to me is volume moving? Now, again, from like just the general interest standpoint in markets, which obviously I'm fascinated by GME, but like I just love markets. You could tell because even when I was on vacation in Alaska, I was making videos about this stuff. I love markets. But so there's that side of me that wants to understand some more of the background, but I always make sure that there's a bifurcation in my mind. I'm compartmentalizing. Like I want to know why this volume is here because I'm generally interested and maybe I can find a way to detect different kinds of volume signals to make decisions. So I can do that. Now with GameStop, it's interesting because again, like if I zoom this in a little bit more, it'll be easier for you to see. This is right now, let's go to 6 months. Notice something very specific. And this is my initial key. And this is actually what made GameStop pop up on a scan for me. Notice this day doesn't look interesting by itself. I'll zoom in so it's easier for you guys to see. This day right here, it doesn't look interesting by itself. It actually looks like it pales in comparison to everything else that we saw here. But relative to the time frame before all of this happened, this looked like a freaking mountain. As did this. These periods looked really interesting to me. So when I saw this day come through where the buy volume was 8 million, the average volume at that point was 3.9 million per day total. The buy volume in this case essentially was almost 2.5 times that. Well, 2 times. This becomes super interesting to me. So this popped up on a scan. So then I started following it and I see this volume dumping in. So something's going on. And the fun part is if you look at the options chain, you could see somebody knew something was going on. And it wasn't just Roaring Kitty. There was more players in there than Roaring Kitty because I started getting in along with a bunch of other people that are looking for these same kinds of things. Now, it's really important to note, sometimes it turns into nothing. That happens. It's not a sure thing. But what I'm trying to do, again, from a trading perspective, is just picking up breadcrumbs from options markets, which are highly informed. Smart people use options. And it's not because options are like cool or anything like that. It's because options provide leverage. Smart people like leverage. You can make more money on your smart idea with leverage. Exactly what's going on there to a T. So when I see this kind of movement, I am very, very interested. With GameStop, though, obviously it's super tricky because we don't know exactly what causes the volume. And it looks like this is the other part of the story that's really interesting to me, is that when I look at these different really large movements in GameStop, a lot of times I think there are different factors that drive the price performance. That's just been another wrench in identifying like what the real signals are, is that it looks like it's multivariate. That's as far as I can tell. So it makes it much more difficult to discreetly identify stock prices moving because of X, because of Y, or because of Z. Because sometimes it moves because of X, other times it moves because of Y, other times it moves because of Z. So again, for me, I funnel all of that into what I can tell you, again, with near certainty. Volume moves. I've not seen any sort of massive movement in GME before volume has moved. So if we go to a 5-year daily and we look at the pre-squeeze move here, look what happened to volume. You got a ton of crazy expanded volume. Here, I'll zoom it in so it's easier to see. Take a look at the volume here, right? This is well before it started running up even above 100. in this case, it had already made a giant move. Here it was like $5. And here it doubled to like 10, but look at the volume. It's massive. So that's realistically the ultimate trigger that I personally use for stuff like this. Now, again, as I'm analyzing it, this stuff I just find interesting and I want to learn more about it. I want to understand more about the product, how it moves, its quirks. But this really comes down to just interest in what drives the volume. From a trading perspective, I'm just looking for volume. That's how I'm going to find movements. That's why I've been so disenfranchised as of late, because literally, you can't even see the volume anymore. It's so suppressed. And part of that suppression, to be clear, is going to come from this. Jerry Diamond says volume is the ultimate trigger he uses after the facts. No, that's what I'm trying to show you, is that volume starts to kick off before. That's the whole point I'm trying to explain to you guys. So again, maybe the point wasn't clear. So in this case, look at the 2nd of May. We can see that price of GameStop 2nd of May, it closed at 1276. And we can see that the volume though, the buy volume on the 2nd of May, when it was still sub $15, the 2nd of May, the buy volume was 8 million shares. The 20-day average volume at that point was 3.9 million shares. That's 3.9 million shares over the entire day on average for the past 20 trading days. On this day, the 2nd of May, the buy volume, only the buy volume was 8 million shares. So the buy volume on the 2nd of May was twice the average total day volume. This is again when GameStop closed at 1276. This is light years before the interesting move happened, right? This is on the 2nd of May. You didn't get the ultimate moves until the 13th or the 14th of May. This is exactly what I was just showing you, again, going back into 21. Before, in this case, we went up above 100, the volume started growing above average volume levels days before. So like the 13th of Jan, you can clearly see excessive volume, even on the 11th of Jan. So what I'm highlighting is actually the exact opposite, Jerry. I'm highlighting that volume can start showing us positioning before the move. Because exactly to your point, what good is it to be able to say like, oh yeah, on the 28th of January, it was so clear that this was going to happen because the RSI started peaking and yada, like it's all bullshit. Like the ability to look at something afterwards and paint a pretty picture is completely useless, exactly to your point, because it's after the fact. Of course it's clear, it's hindsight. But what I'm trying to show you specifically with volume is that volume is such a great indication of things that might be happening. And again, I already told you, it's not perfect. There will be times where you'll see a volume run up and then something falls flat on its face. That absolutely happens. But when you're trading, it's about a probabilistic assessment of things and where can you find a higher probability of a move. And the reason why this happens is because markets take time to position. It's not an instantaneous thing. We as retail traders, that's one of our very few advantages, that we get to position however we want, whenever we want, and you can essentially do it with your entire account. That is not the case for larger institutions at all. Larger institutions have to take time to position things however they want. And even somebody like Roaring Kitty, which we clearly had an example with not that long ago, when he started posting his YOLO updates, we can trace back his behavior when he was entering the position. And you can see that he had to build it over time. So yeah, I mean, that is again, like one of the very, very few benefits that we have. And I am getting a dinner order ready for my wife and I think we're going to do barbecue tonight. A little bit of barbecue. It's supposed to be good for the soul, they say. I'm going to do tri-tip and pulled pork. I think that's what I'm leaning towards. What do you guys think? Maybe do it like the spicy barbecue. That's what I'm going with. I think that's a good pick. I'd rather be seeing says increased volume starts before the actual move. Yeah, exactly right. The vast majority of instances, you'll see volume move before the underlying starts to move. Dan says doing a stir fry with veggies, rice, chicken, steak. Oh, dude, that sounds so good. Tomorrow I was going to do pasta with garlic and oil. My mom used to do that. She does like, I don't know, it's super, super good. And I like that a lot, but I always add chicken to it because I don't just like eating pasta by itself. Obviously, it's just like a lot of carbs for the sake of carbs. And then also, I need to text my wife quick to see if she can hook me up with a reload. Can you grab me a reload of mango, orange, spindrift? She's the homie. She essentially keeps it pushing in here because I think I've told you guys, like towards the end of the day is when I normally break my fast. So I start going through liquid like a mother. Colonel says you're living the life of Pat Riley. I actually don't know who that is. Is that like I actually have no idea who that is. I'll have to look them up. And then back for, I forgot, Jerry. I think Jerry originally was talking about the volume. I just want to make sure, Jerry, that makes sense for you. Because I think that's like a really important general point for people, for traders in general, because it's one of the cleanest indicators that you can use. It's very difficult to use just volume by itself. Like I said, you kind of have to pick up other context clues, buy volume versus sell volume, buy volume versus recent average volume. There's a lot of these like smaller quirks that I think you have to pay attention to. So another thing that you'll find on my chart sometime, that not here now, but is actually 2 moving averages. So in this case, I have a longer term moving average. You're the bomb. Thank you. And then I sent you a barbecue. She came in with the hookup. Thank you. There we go. We got another mango orange. I was having to drink my backup watermelon seltzer water, which is just a giant step down. All right, so it looks like we might have lost Jerry. That's okay. I just wanted to make sure that the explanation was clear, because I really do hate it when people are doing technical analysis after the fact and we pretend like it's all so clear and we could see all these things ahead of time. It was like the clearest thing as possible. And yeah, I just don't think that that's useful. It looks like there's a question from Tommy. Tommy says, what volume specific scans do you use in TOS? There's a bunch of them. So I'll use percent growth. I'll use percent growth over an average. I'll use percent overnight growth if I'm trying to trade something next day continuation style. I'll use standard deviation. That's another big one. So like volume that exceeds 2.5 times standard deviation. I'll use volume that's accompanied with a price gap. All of those are on the table for me. Volume is one of my favorite scans because it really is like super, super telling. You can learn a lot by looking at volume. And again, it's not a perfect thing, but what I like to do is start with volume and then I'll then start to build off of it with what else I can see. So sometimes if you start with volume and then you start seeing, like, for example, the moving average starting to expand, and then you start to see the buy volume as a larger percentage of total volume, like all of those things start to coalesce, I think, into like a really, really cool picture that's relatively, I don't want to say easy to see, but it's relatively high probability, I believe. But I definitely like to make sure that if I'm playing something, one of the base requirements almost always is volume. If there's no volume, you're losing liquidity, which you need in order to get in and out. And you also need volume because that's, again, what ultimately moves stock price, which is kind of that smaller component we were talking about a little bit earlier when I kind of glossed over it. I'd rather be skiing says volume is like hearing a gunshot. You just don't know where or if it will continue. I know. Yeah, I think it's a weird comparison because if you've been shot at, you actually get kind of good at knowing how to detect like different sounds of gunshot where it is. So I get your point though. I think overall it's a good point. Nola says, what's your analysis of these recent low volume days? Yeah. To me, it looks like we're consolidating. So a couple things that I think about in this, within this context, you can see that even on this really light volume, GME's not being pushed down, which is actually to me like really good news. So when I look at like this day, it was 64% sale volume, meaning people hitting the other side of the bid-ask spread. And it still was a small up day, like not huge. It opened at 22.37 and it closed at 22.40. So, I mean, we made 3 pennies on the day. It's nothing really to write home about. But if you think about it in the face of doing that with pretty decent sale volume on a relative basis for the day, I actually consider that a little bit of a win. So I think GameStop is getting really close to a point where like investors are generally agreeing on the value. We did an exercise not too long ago on like what the intrinsic value was. And I know a lot of people got pissed off at me for talking about like the intrinsic value. I don't know why, because I'm not suggesting that that's, GameStop is worth something. But what I'm using that as a benchmark for is like when people ask how far we think GameStop can go down to me, using something like intrinsic value is just a really great back of the napkin parameter to use to start with. Because again, like as something starts getting towards its intrinsic value, just about all investors get interested in it because then it's not even trading at a premium to future discounts, to discounted future cash flow. So because of that, I think it's just a good general tool to use from like overall context. Cedric says 13 is the book value, right? I don't know. So I looked it up on ChatGPT and it was a little bit lower than that. Let me see. What is GameStop's current intrinsic value? And I'm using intrinsic. So if you're using book value, that's a little bit different. Let me ask that question too. GameStop's current book value, which I think I have actually. Let's see. Book value per share. 3-year average is like 10,403. It doesn't, this is just giving me an average. Book value per share. Here you go. This says like 438. That's a different metric. So intrinsic value is kind of what the actual price if it unwound entirely. So this says as of 14 Aug 24, the intrinsic value is estimated to be $8.45 per share based on DCF. Now, a discounted cash flow model is still kind of different. I wouldn't use that in this case because it misses a lot of context. It looks like the other thing that ChatGPT is saying is that the intrinsic value ranges between 7, which is not true, and 1109, which I think is a little bit low. But I think using 11 as like a floor is reasonable. Again, it's like a conservative, reasonable floor. But to me, I would probably guess it. I haven't ran it yet myself, so I can't tell you. But it's not hard to run. I can download the fundamentals and look at, again, like the objective, if we were to flatten this entire company, what it was looking at. But in this case, I would guess somewhere around 12. That's my best guess. Like if I were to just swag what I think the current intrinsic value is. Now, the problem with using an intrinsic value like that, though, is that you also have to take into account the IP, intellectual properties, the brand value itself, and this does have that. So that's also another reason why I think it might be a bit higher than those like generally super conservative estimates, in my opinion. So Yeah. Cedric says, now we are 22, so that's 6 per share different on the books. Right. Well, that's because, again, you have to remember when you're looking at the stock price of something, you're looking at a forward projection. It's an expectation. So right now, this is looking at like the future. This is discounting the future cash flows. This is what we think GameStop will be able to produce over the next 6 to 9 month time frame, given what we know now. So it's by its very nature a very conservative estimate. So, yeah, I think Nola says intrinsic value includes inventory, physical real estate, or negative value for a lease. It depends on what model you use. The way that I like to think about intrinsic value is that if it had to start liquidating and essentially like closing out the business, what would the value be per share? So I think about something like a lease, whatever value is remaining on the term of the lease that would have to be absorbed, that would be negative. But if we're going to unwind the physical real estate, the current market value of the physical real estate would be whatever that value is. So the difference though in the way that I think about intrinsic value is that I don't think about like overnight liquidation, because that would infer having to do things at like just egregious prices, right? Because of the time-bound constraint, you would have to sell things crazy. So I think of it as like a reasonable time frame for liquidation so that you can get like fair market value for things. So Dan says, I'm all in on GME. Yeah, that's awesome. I like, again, from a trader perspective, the trader has to do whatever is right for them. In this case, I don't think GME is positioned poorly. I think that right now it's running, again, like kind of consolidation. That's the overall feel that I get here. We're starting to build out this volume node. You can see it breaking out right here. That's starting to grow and grow and grow just as more people transact here. This was also pretty cool to see people starting to buy in, because my original idea, which I was a little bit off, but it's this, I haven't moved this price handle, which was like just around 18. So I used 18 just because it looked like near-term support based on what we saw here. And again, like this is not something I added after the fact, kind of what we were talking about before. I added this before we started getting down here. I added it when we were back up here because I was just curious where things were looking like they were going. So when I see like price move here, but you can see volume expanded that day. So it was 93% buy volume at 11 million shares, where the average at that point for each day was 12.9 million shares. So that was good to see. That was like a lot of people buying at a specific value area that they thought. So yeah, that's kind of what I think about at least the recent lower volume periods. The options chains have also been much more quiet than I've typically have seen them, which has been kind of interesting. Again, let me know whatever else you guys want to look at. I'm going to pivot back over to taking a look at the rest of this, well, kind of like the new developments in the case. And then, but yeah, like we literally can pivot as much as you guys want. So you can see that there's been a bunch of stuff going on. So the appearances and stuff, yeah, this is talking about like summons for things. Essentially everything has to be logged, but the interesting stuff is way down here. Down. But I think it's attachment 5 is the exhibit 40. Let me double check. I think this one is the deposition. Yeah, this is the deposition. So let me open this one here. And then I'll, as always, give you guys the source so that you can look for yourselves. And we'll grab the text. So let me see if this starts here. I haven't looked through 4 yet. Yeah, so oh, okay, here we go. Let's see what this is. So this is showing price volume data. So we don't have to worry about that. Let's take a look here. Paul and Install says, been swinging this from the beginning. I'm feeling great and still transferred to the purple circle. Yeah, that's great. I think that's awesome. I think something like GameStop, when it has volume, I mean, it has a ton of volatility. It moves all over the place. It really is a great trading vehicle. So yeah. Stephen Brown's dropping some random ass stocks in here. So I'm actually going to get rid of those because we don't need that floating around, some random ass bullshit. If we want to take a look at it together, I'm down, but that didn't look like it. That looked like you're just sharing a random ass name. All right, so let's see. You were investing more money into GameStop, correct? I've invested since 2019 and never sold my shares to date. And you never shorted? No, not even one. Not that I believe. You don't like short sellers. That's correct. So the Q obviously is the counter side, the opposition, and then the answer in this case is Cohen. I believe you sent out a tweet 15th May saying taxpayer money should be spent cracking down on hedge funds and short sellers. Why did you delete the tweet? I don't think so. So you don't believe that you deleted it? I don't know. Can you show me the tweet? Well, I cannot because I couldn't find it. It's not there on your page anymore. So then it was deleted. So this is really interesting. The reason why attorneys do this is because they're to the non-initiated. A lot of the questions that go down during a deposition can look really stupid. But in fact, they're not stupid. They're very, very, very educated movements that they're making. Because one of the things that they're trying to do is essentially box in the responses given so that if it goes to trial, they know what he's going to say. And then if he says something else, he looks, it creates a problem, right? Because then they'll say something like, oh, well, you said this during, under oath. Why is it different now? So that's why they're asking these questions. So that if during trial he contradicts himself in any way, it again will look not good. Mr. Farina, who is obviously Cohen's attorney, says objection form, witness. No, I don't remember. Well, let me back up a little bit. Did you delete the tweet? And then, so right, like they're trying to box him in just even on this stupid little thing. The other thing to know about depositions is that it's just a war of attrition. They have a certain amount of time that they can spend with people. And their goal is to ask the same question in as many permutations as they can. And part of it is just becomes like a metronome. You feel like you're answering the same thing, or you feel like you fully answered a question, but in the attorney's mind, you haven't because they want to close out the question. So that's why you'll see stuff like this. It's like really arduous to get through. So Cohen says, I've made multiple tweets and comments about the fact that I do not like both hedge funds and short sellers. What's the reason for that? I think it's un-American to bet on and to profit from someone else's failure. It's one thing not to invest in someone's success. It's another thing to profit from someone's failure. And I think it's un-American and it's illegal and it's legal and they're entitled to it, but I don't like them. Like, what a great answer. I literally love that answer. This says, I mean, that's my opinion. I don't feel as people should profit on and bet on somebody else is going to fail and employ tactics in order to increase the odds that they're going to be, that they'll end up failing. And that's what a lot of these hedge funds and short sellers do. Yeah, that's awesome. Why do you feel so strongly about the fact that they're un-American when you're not an American citizen? That's so funny. Mr. Frida says objection form. The witness says it's not about being a citizen, being un-American. It doesn't matter about whether it has nothing to do with citizenship. Then Joffrey says, so then it has to do with innovation, entrepreneurism, the fact that this is the greatest country in the world. Less than 5% of the population has 25% of the GDP. So much of innovation come out in America, da, 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 da. So then the other side says, let me get this straight. You don't like short sellers. You want the government to crack down on them, but you allowed your lawyers in this case to make filings saying that retail investors were crooked manipulators because they were trying to bet against shorts. Objection form. I don't know what my lawyer said. What I'd say with respect to hedge short failure is that I find it ironic that if you have a large position, you disclose that long position, but if you short that position, there's not the same kind of disclosure requirements, which is a really great point. So I believe there should be more transparency. This is just absolute, like, I love this. Hall and Install says the vagueness in RC replies is defining to the ears. I think you might have meant deafening. To their ears, hearts, and minds. I love it. Yeah. Well, the other reason why he would answer like this is because if he's talking about like a previous recollection of some time ago, again, like he also doesn't want to contradict himself. So his counsel, they will coach him on how to answer all of this stuff. So that's why a lot of the responses are going to be broader in nature, because he's, again, being advised by really smart attorneys, and he's doing his best to fall in line with, again, the coaching that he got. But you said more than that. They're against entrepreneurship on Americans. So it's not just about the disclosures. It's more than that, right? And then the attorney, the opposition says, so I'm going to back to the questions about the filing in this case. Are you aware that there is a motion for class certification that's pending in this case? He asks, do you understand what it is? Then Mr. Farina, which is Cohen's attorney, says, I don't think he can have an understanding other than what he obtained from counsel. Then the other side says it's a public document. He can have an understanding of a public document. And then he goes on to say, unless Mr. Farina tells you not to address my question, you have to address my question. Would you like me to repeat it? Then Farina says, well, if you can address the question without anything that you've learned from your lawyer, why don't you go ahead and repeat the question? So they ask the question again. Have you read the motion for the certification and what's filed in this case? So now the attorneys are going back and forth. I'm not going to go through all of that. So right now what they're trying to do is they're playing a game of like gotcha, right? They're just trying to see if they can get them to say something or do something. And I think, they're just trying to play gotcha, which is just super annoying. My question was, are you aware of the fact that your attorneys in your name have argued that the fact that people couldn't short BBBY stock enough meant that the market for that stock was inefficient? So for those that don't know, one of the arguments for efficient markets is the ability to short things, because sometimes we know traders can bid things up to nosebleed levels. And sometimes it's based on like FOMO, euphoria. It's not based on the actual value of the company itself necessarily. So one of the arguments for short selling is that it does technically make markets more efficient by starting to press down some of that value until enough people oppose the selling value, which would likely denote some sort of equilibrium where we both agree. The short sellers are like, okay, well, there's enough buyers here. I can't press it down anymore. So this is where people actually think the stock is worth. That's kind of the general argument behind it. So they're just fighting back and forth. I think we can skip through some of that. They're talking about attorney-client privilege, right? So they're not talking about answering conversations behind these. Alfonso says, not for nothing, but Cohen bought his most recent shares in GME in March 22 and then liquidated all BBY shares 5 months after, mid-August in 22. RC Ventures' most recent 30F only holds GME. Yeah, well, I think in this case, a lot of that is because he realized that he was going to run into structural issues when he was trying to start angling into Best Buy. That was going to cause him problems. So I think that's why he started his unwind. R says, what stops shorting from just being bidding down problems the way bidding up was a problem? It's inefficiency in both directions, isn't it? Well, that's the idea, though, is that because both directions are possible, is that it would gain efficiency. So again, you can have something, to your point, that gets bid down. Like, for example, a great example of this, I think, is CrowdStrike. And again, full disclosure, I traded this because this movement. So this was bid down into the dirt until people started to buy it. And then now it's obviously moving back up towards some sort of accepted value, broad accepted value for the price of the underlying. Now, this will happen, though, because of information indiscreetness. It takes time for information to permeate through a market and then to be positioned by people. So this kind of thing, again, is because I sold this short to the down. Well, I didn't sell it short. I don't typically use that. I use options to trade it to the downside. But as it's running to the downside, then there's a bunch of different reasons why this gets sent down so far until enough buyers start to step in. They're like, okay, well, I actually really like this all the way down here at 200. So the short sellers start to get tired. This movement becomes the representation of the failure that they had in the systems, which overall to me didn't look quite that pervasive. So Ape of Spades says we already had that. It's called selling. Not so much. Selling, again, it doesn't have the same effect as shorting, because selling, it's almost like the removal of something, but it's not the active suppression of something. So they're kind of different effects. I wouldn't equate the process of like selling out of a position as short selling. Ape of Spades says supply and demand can still exist. Yeah, of course. Yeah, no doubt. There's absolutely no doubt. I'm not arguing that short selling has to exist. I'm not saying that at all. But I'm simply talking about the way that people, and again, like from an objective analysis standpoint, on why it's argued that short selling increases market efficiency, because again, like arguably it does. So to Ape of Spades point, I get the point totally, that essentially we can get to a point where like here, that enough people are like, okay, I don't think CrowdStrike is worth more than this. So then from here, they stop buying, and then price naturally could start to drift sideways. But if you have people that can actively sell against it, the process would happen faster because there's kind of a counter opposing force. R says, I'm not arguing against short selling. I'm just skeptical of efficiency arguments. I don't know why. I mean, the process of identifying like activities that make markets more efficient are kind of easy and clear to see. Now, the secondary and tertiary effects of those obviously is up for debate. And then whether or not we like the practice in and of itself is obviously up for debate. But again, like I can look at something like payment for order flow, and it's objectively made markets more efficient. We might not like it. We might not like elements of it. I don't. I think it creates some fucked up incentives. But I can still look back 50 years and I can say markets now are more efficient. And one reason for it, I'm not saying the only reason, but one reason for it is because of payment for order flow. So if you have people competing to obtain order flow, that competition will make things slightly more efficient. Your order execution, your bid-ask spread, your price improvement. Again, I don't think payment for order flow is great. I think there are better systems. It's not my favorite thing in the world, but it's not the, again, like the boogeyman. Ape of Spades says with efficiency comes conflict of interest. Well, I think anything related to financial markets is going to bring conflict of interest. So yeah. R says, I don't think market participants are motivated in their moves to make markets objective. I think profit is created from differentials, from price movement. So to profit, you want price to move, right? I'm not totally following the first part of your argument there, but yeah, for the second part, I would agree with you that in order to make money, you would want price to move in some sort of direction if you're buying equity or selling equity. If you're buying or selling a product, you would want it to move. I agree with that. Yeah. Dr. Zay says more efficient in this context is a step in the wrong direction for most people. Yeah, again, I'm not sure I would fully agree with that. I like markets now more than when I first started trading. And that's for a bunch of different reasons. Not only is it cheaper from a commission standpoint, but I get better fills. Markets are now much narrower. So yeah, I mean, for me, I think markets being more efficient now is good for me. So again, like if that's the ultimate stop, or, you know, if people want it to be more efficient, I think that's a completely fair argument. And I think we're in a position that markets can be more efficient than they are now. I agree with that. Willie says, can it be argued that payment for order flow contributes to monopolistic practices? I agree. Yeah. Now, places like Citadel and Virtue, they're not necessarily the only entities that can enter or can run payment for order flow. Other people can enter that market, but it's really competitive and it's hard to break into. It's kind of like the search engine market, right? Like, are there competitors for Google? Sure. But it's really difficult to compete in that space. That's what makes Ryan Cohen, I think, so fascinating, because he was able to compete with Amazon with something like Chewy, which is not an easy online market, especially from a logistics standpoint. So that kind of thing is crazy that he was able to do it, but he was, and he was very successful. So yeah, I think that, Willie, to your point, I agree with that. But Willie says payment for order flow itself is not a bad thing in itself, but when a handful of firms that have that power, it can be abused. Absolutely. Zero debate. Completely agree with it. I also would even take that argument a step further and say that payment for order flow itself I actually don't love that as an incentive. I think it should be an open competition for order flow. Like, I don't think it should be bundled, because from an execution standpoint, that actually disincentivizes the optimal order routing for your transaction, which is really frustrating. But again, like, even though that's the case, the order routing, even though it's not optimal, it's still better than what it was. This is the nature of the game, is that it's not exactly black and white. There are shades of gray that have to be considered, I think, in order for it to be like a good discussion about the structure of markets. So I completely agree with you, Willie. I think that anytime you have money involved, lots of money, there's going to be bad actors. That is how it's always going to go. As soon as there are large buckets of money that are accessible, there will be bad actors. I guarantee it. Always going to be the case. And that's, I mean, just how things go. Like, the people that want to try to take advantage of things, they're always there, and they shapeshift over time, but they're still there. They just take different forms as things evolve. Alfonso says home computers and the internet have brought efficiency. I remember my dad getting phone calls at dinner to confirm his trades that he placed by his phone earlier. Yeah, that's hilarious. That's so true. Beach says, who do you have in the UFC main event tonight? I don't know who's in the UFC tonight. I was looking at the Craig Jones Invitational first. I really want to see him in Gabby, because I just think that's going to be hilarious. I also want to know who won it. I was watching yesterday's stuff earlier. So let me see at the UFC card tonight. Is that Izzy and Duplessis tonight? Or am I making that up? It is. Ooh. Man, that's a toughie. Fuck. That is such a tough card. What are the odds on it? So it has Izzy. Izzy is the -130. I could see that. I mean, from a striking perspective, I would have to give it to Izzy. From a striking perspective, no doubt. But Izzy, I feel like he hasn't really been showing up as good as he has been. Even like that fight with Strickland showed that. So it would not shock me to see Duplessis win, but like, I would have to agree with the odds on Izzy. I think that's a fair line. Now you got me looking at, how did Jenkins do? He won. That's good. I'm glad Jenkins won. All right, I'll get out of UFC. You fucking sent me down a tangent. You always know I'm down to look at some fight stuff. But yeah, I would have to lean towards Izzy personally. All right, let's poke through this a little bit more, and then I want to take a look at Chewy a little bit. Nola says Chewy calls went kind of crazy Friday afternoon, huh? Yeah, we'll take a look at that for sure. I'm trying to see if there's any other like really interesting bits that they got out of here. This looks interesting. Q. No, it's in it. But I think that my question is a little different, which is when it comes to those people who interpret your tweets, like the ones you discussed with Joe Fonicello, like people on Twitter who respond with your tweets, you've never tried to correct them in any way and say that you are misunderstanding what I meant. My tweets are just me being me. I don't know what tweets you're referring to. I don't know what comments you're talking about. And you're talking about people as in they are speaking in generalities. So if you have a specific question, I'll answer it, but I don't understand these generalities. It's impossible to answer the question. That's a great response, by the way. So right now, what it seems like what they're trying to do is to start creating a line between his tweets as possible drivers of movement. And in this line of questioning, they're trying to say, well, you're not necessarily outright saying, you listen to these things of what I'm doing, but you're also not correcting people when they're misinterpreting your stuff. So they're trying to catch them with like the null is what that looks like, which is, again, just super annoying. I'm specifically referring to Twitter. Yes. And which comment on Twitter and which post did I make? Any comment. Do you recall even one instance? I rarely reply to my comments. Sure. That's not my question, Mr. Cohen. Do you recall even one instance where you posted something and someone interpreted a meaning and you said that's not correct? I don't remember. That's hilarious. And it looks like the reporter needed to take a break. Fair. Can we focus on the final sentence here in the third paragraph? You know, the one that started with, as a role model among apes. We talked about it already. In that final sentence here. Yeah. When it says any news about the investor is often enough to generate positive sentiment among apes active on Reddit. Hey, shout out to you guys. Do you see that? Yes. Okay. Now, have you seen another article saying that they have that specific thing that we just read to you? I don't remember. Okay. But you may have. No, I meant I don't. What I said is I don't remember. Okay. Now you've never gone. Shit, I fucked that up. Sorry. Now you've never gone ever publicly and said, I'm not a role model for the apes. I don't believe so. Okay. And you've never gone and publicly said, I've never said I'm a role model for the apes either. Please let me finish my question. That's just jockeying for position. You never gone and said that you're not influential among this community of retail investors. I've never said that I was. That wasn't my question. You've never said that you weren't, correct? So that's all this is. They're trying to catch him with nulls, right? Because obviously, like, who would go on social media and, for example, with Jeffrey Epstein and all the bull crap that he did everybody have to go on social media and be like, I don't agree with that? No. Like, it's kind of inherent that what the dude did was shitty. And it was like, most people don't agree with that. So in this case, they're trying to start lining them up for, well, you've never explicitly said you're not this thing, which is crazy, absolutely crazy, especially because the way he communicates on Twitter or X, right? Like, if you look through his stuff, a lot of it is jokes like this. Like, he's just playing games. So that's like the whole point of, he's a troll. So this is kind of nuts. Okay, you have publicly said nothing in fact to assert that you do not influence stock prices like this. Who would go out of their way to say, like, I don't influence stock prices? I don't believe so. And you've never said that I, Ryan Cohen, don't generate positive sentiment among meme stock investors on Reddit. I never said I do, but you've never said I didn't, right? I don't believe so. So you never contested any of. So then he goes into investment advice stuff. My question wasn't about, whether you should provide investment advice. Your question is putting words in my mouth. Yeah. This from the door, leave that. This from the attorney is hilarious. From the opposing counsel, this is literally hilarious. You're giving me a justification for why you didn't do this. I understand. I'm not interested and I don't care. It's just a funny line from the opposing counsel. Alfonso says Musk trolls much harder than Cohen. Musk absolutely does. That's the funny part, is that a lot of these guys are just trolling, but in this case, they're trying to use it against them. My question is very, very simple. You've never gone and said something like, please stop saying that I generate positive sentiment against these so-called apes on Reddit. You never done that. Answer. I've answered your question, which is a yes, that you've never done it. I answered your question. What was the answer? Is it a yes or a no? It's a simple yes or no. You can go through the transcript and you'll see my answer. Q, well, I think you said yes to some of the things, and I don't know why you're struggling so much with this one. Again, this is quintessential. They're trying to fatigue him. That's why Cohen is starting to answer like this, because he's starting to become slightly belligerent. And this actually doesn't normally bode well for his argument, because it does make him start to look slightly belligerent. I would understand why. I would be furious with this. This would get so old so fast. But it's part of the game, and it's why they're doing this. Is they're purposely trying to do this. So then when I told you, have you ever said, for instance, that you don't have influence on stock prices? You said that you haven't. So this is a very similar question. It's just about a different topic, which is, have you ever said that you don't generate positive sentiment among the apes on Reddit publicly? I don't know. You haven't, right? No, I don't know. You don't recall any instance, right? So again, this is them trying to close out the topic. Recall any instance. It's very purposely phrased like that. These can seem like really stupid questions, and they kind of are in a sense, but they're really calculated. I just try to remind you guys of that, because some people can look at this and kind of just think like, oh, what is all this buffoonery? But it's actually really, really tactical what they're trying to do. You don't recall any instance. You can't tell me one example where you have publicly said it. I don't know. Okay. I don't remember every single thing that I've said. So then, very, very screw transformation that the company, especially going into a macro time, a lot of uncertainty given the balance sheet. You see all that, right? Yep. So he's obviously talking about a specific documentation or tweet that he said. He said, so when you said that is it true that you said that to the company did not have the balance sheet to transform the business? Answer, I don't remember exactly. These are not my notes. Okay. But do you believe that the company did not have the balance sheet to do a transformation? I believe that the company was doing a lot worse than I expected and losing a lot of money. I didn't have visibility, obviously, into the future trajectory, but based on what I saw in the previous quarter, the company was using a lot of money. So again, they're trying to now tie Cohen to the perception of the stock, which was one of the things, if you remember from the first document, that they're trying to contest, that they were providing a skewed perception of the stock. Let's see. The final section of the page here says, again, is attributed to you. It says, RC, do you see that, but operationalizing a plan? You see that. So it says, but operationalizing a plan, SG&A at 33% isn't sustainable, and GM contracting by 400 BPS. So back to SG&A, mid 20% will involve pretty significant changes in the company. Given the macro backdrop we're heading into, probably some big changes. Is it true that you wanted the company to cut back on its SG&A expenses to get it down to the mid 20%? I wanted them to reduce expenses. Yes, to mid 20%. I mean, that sounded like a good target. Okay, and that number happened while you were invested, correct? I don't believe so. And then the answer says, and then over here, does this jog your memory where it says we scrapped the 2020 plan? I don't remember that. I think it would, and this was a funny comment. I think this was a 150-page, God knows what they paid McKinsey to do, talking about how they were going to have private label, all kinds of things. And I thought it was crazy. And I said in the letter, thought it was crazy, but they never changed their behavior. So they're just going back and forth now about the operation of the company and how it was doing. Let's see. So this one says, so you wrote, given that I'm going to be in the market buying, I'd like to cancel the call and ask her to speak next week. Nola says, so as an activist investor, RC ran into resistance from the board on the direction he was interested in taking the company. That definitely seems part of it. I don't know exactly what ended up making him divest. So let's see. I'll ask ChatGPT. When Ryan Cohen bought into BBBY, what ended up making him divest? Let's see what that comes up with. After initially buying into the company earlier that year, the decision to divest was influenced by a combination of factors, including the lack of substantial progress in turning around the company, as well as growing concerns about the financial stability. So I think there's a lot more to it than that. I don't remember all the details, but I know that there was a significant change in the backdrop, and he definitely didn't like the direction that things were going. Now, I also think that there was a couple forcing functions that came with his size that he came in at, and then what he was trying to grow up into. Alfonso says, but the lawsuit asked for a return of short swing profits on his sale of BBY shares per section SEC Rule 16B. Alfonso says, I don't see any impact on GME. Well, I think the impact that this can have on GME is that while Ryan Cohen is wrapped up in any sort of litigation, it just is immediately going to complicate other stuff that he does. To your point, I don't think that this prevents him from running GME. I don't think that this has a direct impact on GME, but I would frame it that there's a secondary and a tertiary effect that this will have on GME, just again, in the sense that the CEO of GME is wrapped up in this other litigation. So even down to as simple as this is something on the back of his mind that he has to deal with while he's trying to run another company that, again, like, we have to be honest with ourselves. GameStop has to innovate here. It has to change things quite a bit in order to kind of really rise into what it can be. And that requires a ton of effort. And for most CEOs, that is a full-time effort. It's not like I have to spend 30% of my time dealing with this case and then 70% of my time trying to grow this company. Most of those kinds of transformations take like the majority of effort. So even from just a drain perspective, this, in my opinion, will have an impact, hopefully. And I think so far he's done a great job. Like, he's obviously super resilient. This isn't like killing him or anything. You can even tell from the way that he's trolling and still having fun. But again, it's just in the backdrop. It's something that's there. Raspberry Pizza says it's the BBY CEO and the board leading up to the bankruptcy that totally misled people that need to be sued. Straight up lies. That's kind of the general thing that I've been noticing. It looks like he's been wrapped into this for a few different reasons. So here he's talking about like what he's gotten into and why. This is interesting. Did you question her about whether there was bankruptcy risk? I don't believe so. So we'll show you one dot. So this is also really common, which is super annoying. So a lot of times in these kind of depositions, the counsel will ask you about something that they already have shit on, and they won't show it to you unless you ask for it and you know to ask for it. So in this case, when he said, did you question her about whether there was bankruptcy risk? I don't believe so. And then he says, oh, well, let's take a look at this document, right? So it's like those kinds of things are really, really frustrating because it's so easy then to double back on yourself unnecessarily. I'm just seeing if there's anything else that like really sticks out to me as I scan through it. This overall just looks like kind of a standard deposition. I like a lot of the things that Cohen said. I think he's handling it overall really, really well. But as you can tell, it's just tiring. Like, it's just annoying to go through this. if you're going to ask him about the motion, then show him the motion and ask him whether, like, this is another, that's funny that I stopped here. This is another, like, very specific example about this very specific thing. So he said, the next thing I want to address with, are you aware of the factual representation on your behalf that were made in the motion to dismiss about this tweet? Right? So, like, again, he's asking him about a document and he hasn't shown him the document. So his lawyer is like, yo, if you're going to ask him about this thing, then show it to him and then ask him about it. So Farina says, I would suggest you take the document if you want to ask him about it. Right? So yeah, it's just like standard, super annoying, lame practice, but it's how it gets done. This stuff is so annoying, man. Ugh. Oh, I saw the word trading. Hold on, I gotta look. You want to know how long this will take? Am I prevented from trading in the meantime? Can this be done today? The answer, I was not trading. So then they're saying, they're questioning, so then why were you telling him that why were you questioning him about whether or not you could prevent from trading? Because my bank told me that I was prevented from trading. I told them what the bank said. Okay, and why did you contact the bank? Because I was interested in being able to trade. Being able to trade and do what? That, being able to trade, sell, depending on the price. So you were thinking of buying shares on this day, depending on what the price would have been. So they're going back and forth now about like this trading thing. Did you have a thought in your head on this day that you might buy shares of BBY? My dog is letting me know I need to open the door. I think for him, he's going to go now, Hound. I'm going to text my wife real quick and ask her to feed him because I believe that's what he's looking for. He's looking for his dinner. Rightfully so. It's about dinner time. I think my barbecue should be here in a little bit. Depending on the price, what he would have done, obviously. But my question has nothing to do with the response. My question was whether at any point you thought about buying shares on August 15th. I don't remember what I was thinking on that day. Okay, so since it's based on your testimony, then you obviously didn't tell Nebel on this day that you were selling shares, correct? I was not selling shares on that day. So you only told him that you were trading. I told him what's in the email, that you were contemplating trading. He was in communication with the bank that I was contemplating trading and that I wanted the option to be able to trade. So this is going back to trying to contradict his intent. They're trying to say like you were doing this one thing, but you were talking about this other thing. I wonder what the average duration is for a deposition, because I actually think there's rules about how long it can go for. How long can a deposition go for? The duration can vary widely depending on the complexity, the number of parties. Generally, depositions last a few hours, but they can extend to a full day or even multiple days. In federal cases, there is typically a 7-hour limit for a deposition in a single day, unless the court orders otherwise. However, the parties can agree to extend this time if necessary. That's brutal, man. Imagine doing this for 7 hours. 7 hours? Shit. Again, this goes back to I think it was Alfonso's point, right? About like the impact. To me, like that's an impact, man. Like I'm fatigued just trying to read this, right? And you can see he's starting to get more and more frustrated. Literally, even in his written responses, I can see him becoming more belligerent. That's my statement. Those are not my words. These are his, right? Like, so like he's becoming more and more rightfully so. I would be too. Like this is absolutely exhausting to deal with. How does this end? I just told like this. I just told like even the counsel is getting upset. So I mean, it's not surprising. So anyways, that looks like kind of the heart and soul of the overall deposition, which, damn, bro. Oh, I just opened that one. I'm just seeing if there's anything else interesting in here. Cedric is asking for the link again. You got it. Here is the link right there. You got it, Cedric. Anything else we want to take a look at? That was kind of fun. I wanted to spend a little time going through the case just because I was really interested to, again, learn a little bit more about how he handled the situation, what it looked like, what kind of things they're talking about, and also to Alfonso's point, what kind of potential impacts that I think it could have in his operation of something like GameStop, if there's any potential carryover. And again, I don't really see a lot of that. I just see a really arduous, annoying process to have to tolerate. Like, that's what it looks like. It doesn't look fun. It looks like a lot of effort that goes into answering the same questions over and over again, which looks like pretty freaking fatiguing to me, to be honest. So that's what I have for that. Now, the other thing I did want to look at quickly before I wrap is Chewy. And it's because Chewy has been starting to gain some legs, right? Little bit different here. And you can see where I got interested in Chewy. So as soon as it broke above this 25-24 handle is when I started biting a little bit. I don't have a big position, but I definitely am interested in seeing like where this runs to the upside, if it does. And I mean, if it stops me out at 25-24, I don't really care. It's not really... That's not going to hurt me. That would just be flat on the trade. Raspberry says, nice to see RC in action. Dude's a mystery. Amazed that he even did that GME interview. Yeah, I agree. Because that's exactly to your point, Raspberry. Because like, we don't have a chance. He's not doing stuff like this. He's not jumping on a bunch of live streams. He's not doing a ton of other things. Alfonso says, is this for non-payment of BCG for consulting services? No, it's completely different. I think that's already done and gone. This case is clearly more so about manipulation. So they're trying to frame it as if he knew BBBY was doing terribly and he was putting out a different message so that then he could sell his shares for a profit. That's essentially what they're trying to say. So I think that other madness with BCG is a completely different thing. I think that was like $30 million or something in like unpaid stuff to them, which I thought was pretty interesting. But yeah, anyways, so Chewy's been looking interesting. It does have earnings coming up on the 28th. So that's part of the activity that you see there. And then GME has earnings still coming up on, what is it? The 4th, September 4th, I believe. I don't know why it's not showing up on this one. Normally it does. Let me... Yeah. It might be just because there's too much crap on here right now on this one over here. But yeah, so this... And the reason why that's been so interesting is because the expiration that contains earnings is so low. I would expect this to be much higher, but it's not. I haven't really been able to make quite heads or tails on that just yet. But you can see that the options chain has now just become so anemic after everything from the past week was stripped out. The bulk, obviously, of the volume was in the last expiration cycle. And now you can also see that the open interest across the board is just a crapshoot. It's all over the place. But the bigger positions are actually pretty far out in time. There's 17 Jan 25. Like, we don't have a bunch here yet in 23 AUG. And the next primary expiration is 20 SEP, which there's just not much build out yet. Nola says it makes all the social media posts up for microscopic scrutiny, even up to today. Absolutely. Yeah, absolutely. That's one of the most annoying parts about that. It essentially makes everything under scrutiny. Like, even if he was texting with his friends and, you know, like having like a standard joke between friends, that can be added as evidence for whatever reason, not saying it in this case, but in general, like they'll purposely go through literally everything, which is super annoying. Now, to your point though, it's also, I think, one of the reasons why he's trolling the way that he is, because it's kind of continuing to second the fact that he's, you know, a troll. He enjoys just playing jokes and not taking it super seriously. So Raspberry says, hoping to get out of my 20 seps unscathed and throw that into Jan's. Yeah, the problem with 20 sep is, depending on the position, you're going to start running into like pretty accelerated theta decay. So Alfonso says Chewy volume doesn't seem to be linked to share price. What do you mean? Chewy. What you mean, Willis? It looks like it's definitely linked here. Big drive up here. Big drive up. Here. I think it does. What are you talking about? Are you talking about this move? Even this move. It's important to, I think it's important to keep things in context, right? So this move here, the 20-day average volume is going to be super skewed by this stuff. So let me grab this really quick. I have another version of this. Is this? Yeah, okay, this is the right one. So I'm just going to swap it out so that you can see a little bit. But Alfonso, what's your specific question? Because to me, I actually don't follow your point. Because to me, I feel like it's there. Nola says those are pure green volume. Exactly. So to me, it's like massive buying pressure. If I change, where am I at? Oops. Yeah, so if I change this, let's do, instead of 20, let's do what? The past 10 days looks fine. So if we do 10-day MA there. Yeah. So even this is exceeding the 10-day average, right? So like the previous 10 days in here, which is getting rid of this. But the volume on this day was 4.8 million, which is 93% buy volume. And then the average volume at that point for the day in total was 4.686 million. So it literally had more buy only volume on that day than the total average for the past 10 days. So yeah, I'm not exactly sure what you're looking at, but for me, that looks super bullish. Again, it's all in context. It's none of these things typically are going to be, you know, like the most discrete answers or the clearest things on planet Earth. But at least for me, like volume is pretty consistent. So like here on most of these up moves, like I can see volume behaving a certain kind of way. So yeah, to me, I feel like Chewy volume, just like anything else, I don't think it's specific to Chewy or really anything. Like if you look at GameStop, we were just looking at this, the upward price movement that it had here, it was definitely, again, if I close this time frame down, it will be about close to average, but it's like all buy volume. So there's definitely people that are looking to get long the product. So all right, gang. I think this might be my longest live stream ever, but super fun. Love hanging out with you guys. Like I said, I was just chatting with Newton to see when we want to try to set up another joint session to, you know, see what's good for his schedule. I know he's getting busy now with the school year starting and stuff, but as always, whatever you guys need, just let me know. Hit me up in the Discord. You can hit me up on the video comments or whatever works for you works for me. But I always love doing this with you all. I think next week I'll either do this on Thursday or Saturday, undecided yet, but I'm going to keep the cadence going. Once I start something, I tend to keep doing it. So we have daily live streams, and we have one weekly live stream that is dedicated to taking a look at all of the GME and peripheral stories. So that's the point of this. And if there's ever anything that you want to look at in those, just let me know. I love trying to integrate as much of the stuff that's interesting to you guys into them so that we can spend time looking at what you want to see. So let me know if you need anything. Be an outlier, be an ape, and I'll see you guys later.